Ladies and gentlemen, good day and welcome to the earnings conference call of Dalmia Bharat Limited for the quarter and 9 months ended 31st December 2022. Please note that this conference call will be for 60 minutes, and for the duration of this conference call, all participant lines will be in the listen-only mode. This conference call is being recorded, and the transcripts of the same may be put up on the website of the company. After the management discussion, there will be an opportunity for you to ask questions. Should anyone need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. As a reminder, all participant lines will be in the listen-only mode. Before I hand over the conference to the management, I would like to remind you that certain statements made during the course of this call may be based on historical information or facts and may be forward-looking statements. The forward-looking statements are based on expectations and projections and may involve a number of risks and uncertainties and other factors that could cause actual results, opportunities, and growth potential to differ materially from those suggested by such statements. On the call, we have with us Mr. Puneet Dalmia, MD, Dalmia Bharat Limited, Mr. Mahendra Singhi, Managing Director and CEO, Dalmia Cement Bharat Limited, Mr. Dharmendra Tuteja, CFO, Dalmia Bharat Limited, Mr. Rajiv Bansal, President and Chief Transformation Officer, and other management of the company. I would now like to hand the conference over to Ms. Aditi Mittal, Head Investor Relations. Thank you, and over to you.
Thank you, Rupila. Good morning, everyone. Wish you all a very happy new year, and I hope that you all had a great start to the year 2023. We welcome you all to the quarter 3 earnings call of Dalmia Bharat Limited. Hope you had a chance to go through the results and the earnings presentation, which is uploaded on our website and can be downloaded from there. I will now hand over the call to Mr. Dalmia for his opening remarks. Over to you.
Thank you, Aditi. Good morning, everyone. It gives me great pleasure to welcome all of you for the Q3 FY23 earnings call of Dalmia Bharat Limited. Hope you and your families have had a good start to the new year 2023. We are meeting at a very opportune time when the government has just laid out the first Amrit Kal budget, which is certainly a progressive direction by the government of India to give a boost to a technology-driven and knowledge-based economy within the country. The budget once again reiterates the government's focus on building physical infrastructure through a massive 33% increase in allocation toward capex, which is 10 lakh crores this fiscal, and the extension of 50-year interest-free loan to states. It is also heartening to see how the government has allocated 35,000 crore towards reaching net zero emissions and achieving energy transition. Green growth has rightly been listed amongst the 7 key priorities of the government. Even while the most global economies are showing signs of slowdown, my personal faith and optimism on the economic prospects of India is quite strong, and we truly believe that the next few decades belong to our country. The cement sector has a very crucial role to play in India's growth story, and I'm personally very bullish on the long-term prospects of the sector. We remain committed to our interim capacity milestone of 75 million tons by financial year 27 and long-term goal of 110 to 130 million tons by 2031. In line with our vision to diversify and build a pan-India cement company, we have signed definitive agreement for acquisition of cement assets of Jaiprakash Associates Limited, located in central India. The plants are very strategically located and will give us an entry into a very lucrative high-growth market of central India. We are very excited about this opportunity as the transaction is at an attractive valuation and comes at a time when we are at the cusp of an infrastructure and capex cycle and private capex starting to kick in. Continual optimization of costs is an integral part of our DNA, and this has once again led us to deliver one of the lowest total cost per ton and an industry-leading EBITDA per ton of 1021 per ton this quarter. Even as we grow further, amongst other things, our financial priorities will include improving our capacity utilization, sustenance of our total cost leadership, and deliver industry-leading earnings growth and ROCE, backed by a very strong, well-capitalized balance sheet. Dalmia Bharat is at an inflection point where we have added capacity, diversified into new regions, and now I will personally be spending time upon strengthening our organization and building an institution which is scalable and sustainable. As we steer towards building Dalmia 2.0, one of my key priorities will be to invest personal time and resources into our human capital to build leadership teams which are future ready and aligned to our long-term goals. We are making collective efforts to multiply our people power and create leaders of tomorrow. As a part of our ongoing HR transformation, we have, during the quarter, launched a leadership development program called Lakshya, which has a combination of retention cum performance-related metrics and includes personalized leadership, coaching, trainings, and career development programs. We will ensure scalability of our organization structure through extensive automation and digitization, review of our key policies and systems, strengthening our compliance and risk framework as per best global practices, and increase trust on fulfilling our ESG responsibilities. With the swiftness of transformation which I am witnessing across our company and our people, I believe that we are just getting started and the best is yet to come. I'm personally very happy with all that we have achieved this far, and I'm very excited about the journey that we've set ourselves on. I will now hand over the call to Mr. Singhi to take you through the other details. Thank you. Mr. Singhi, over to you.
Happy morning, all dear friends. Thanks, Puneji, for such encouraging thoughts. Friends, let me start by saying that we have once again delivered an industry-leading volume growth of 0.5% YOY to 6.3 million ton, and our revenues have grown by almost 23% to 3,355 crores. Even on 9 months basis, the volume growth is 17.5%, and we are quite hopeful that we'll be able to deliver at least 1.5 times the demand growth than the average industry. Our YOY and revenue growth at 21% is also there. Demand growth was healthy across each of our regions, and price scenario was also stable, with each showing a reasonable recovery in pricing. In terms of cost, due to the higher cost of input materials, the raw material cost has remained on the higher side at 804 rupees per ton. The power and fuel cost also increased 29% YOY to 1,529 rupees per ton. The consumption cost of fuel did see some respite from being at $216 during the last quarter to around 195 during Q3. In fact, the purchase cost during the quarter was around $185, and it is expected that during the upcoming quarter, the fuel prices could stay around $180. Our freight cost continues to remain one of the lowest in the industry at rupees 1,114 per ton. The total EBITDA for the quarter stood at rupees 644 crore, which is a 57% growth on YOY basis, and it translates to rupees 1,021 rupees per ton. We are glad that after many subdued quarters due to high inflation, we have been able to manage the cost and have now crossed the threshold of 1,000 rupees a ton. We remain committed to continuously explore levers of long-term cost saving and are implementing suitable measures that will enable us to retain our cost leadership both in production cost and in logistic cost. During the quarter, we have commercialized 25 megawatt renewable power, which takes our total capacity to 154 megawatt. During the quarter, renewable power constituted almost 24% of our power consumption mix. We remain on track to take our renewable power to 173 megawatt by year end and 328 megawatt by FY24. Another level which add to cost efficiency and sustainability is the announcement of our low carbon cement or blended cement, which was highest ever for a quarter at about 83%. What has really been encouraging is that in South, which has traditionally been and is a OPC market, we have managed to sustain our low carbon cement percentage at around 63%, which otherwise used to be below 50%. Our teams will continue to make efforts to move to 100% low carbon cement in all our regions in few years. Friends, we have been able to further bring down our carbon footprints to 462 kg per ton of cement, which is probably one of the lowest in the world cement sector as well. That also matches the target which we had given 3 years back. Dear friends, Punitji has already mentioned that we have signed definitive agreement for the acquisition of cement assets of JP in central India, totaling to 5.2 million ton of cement and 3.3 million ton of clinker at an enterprise value of 3,230 crores. We are very excited about this opportunity, and as we speak, JP and ourselves are actively engaged in the completing the process for remaining part of the acquisition, and which we plan as per the framework agreement. With regard to organic expansion, our ongoing projects are expected to get completed with the targeted timelines. We remain committed to our interim capacity expansion target of 75 million ton by FY27 and 110 to 130 million ton by 2031. I do hope that our team will take all our actions forward so that we always remain cost competitive as well are able to enhance our low carbon cement production. Thank you, friends. And now I would request my colleague CFO Mr. Tuteja to take over. Thank you.
Thank you, Singh. Good morning, all. Continuing on the capex, the total capex spent during the quarter and 9 months period has been about 900 crores and 2100 crores respectively. During current full year, as was mentioned in our earlier calls, we'll be spending close to 3,000 to 3,200 crores. In terms of incentive, during the quarter, we have accrued income of 61 crores and during 9 months, 180 crores. In terms of collections, we collected 25 crores during the quarter and total 153 crores during 9 months. The incentive receivable as of 31st December stood at around 700 crores. On the debt side, our gross debt increased by about 760 crores and the closing debt as on 31st December stands at 4,050 crores. Net debt increased by rupees 247 crores during the quarter due to the capex, and the net debt to EBITDA on 31st December was 0.39 times. With respect to our investment in IEX, we'll continue to evaluate this and will take appropriate call on divestment at opportune times. With this, I would now like to open the floor for question answer. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Rajesh Ravi from HDFC Securities. Please go ahead.
Yeah, hi sir. Good morning. Yeah, am I audible?
Yes, please.
Yeah, congratulations to the team for a great set of numbers, all-round performance. Sir, my question first on the housekeeping. Could you share what was the per kilocal costing in Q3 and how is the scenario in Q4?
Yes, per kilocalorie for the quarter was around 2,100 rupees per million kilocalorie. And it looks like that the next quarter would be around this number, maybe 3 to 5% here and there.
Okay, great. And how was it in Q2, sir, versus Q2? How much is the drop you have seen?
Exactly, I may not be able to say, but then maybe again 3 to 5% only. But exactly, I'm not sure of this number.
Okay.
Last quarter it was 2.52 per calorie per kcal, and this quarter it is 2.42. There's a marginal drop because of the fall in the petcoke prices.
Okay, 2.5 to around 2.4. Okay.
That's right.
And in Q4, you are not looking major dip from 2.4?
Yeah, the petcoke prices are marginally down. Maybe last quarter to this quarter, maybe $4-5 per ton. So around similar corresponding drop can be there in this also.
Okay. And yeah, coming to these two plants, Murli, what is the status in terms of utilization and profitability?
So the utilization is slowly improving, and in the month of January, it was around, say, 55%, and it's improving. And the profitability now, prices in Western India, particularly in Maharashtra, they are stable. So now profitability would be better.
Okay, so in terms of costing, are they in line with your company average or way above?
It's higher at the moment, and it was expected also. Slowly with the best practices as well as higher green fuel and green power, it will come also to the company standard.
Okay, by when do you expect the cost to normalize to company's level, sir?
In another 9 to 12 months.
Okay, and lastly on the JP acquisition, we see that compared to what you had earlier, announced in December, this is more rational and the operational assets is which you are going ahead with. So this Dalla Super, which was under contention with Ultratech, that is not part of this current deal?
Fred, earlier one was also very rational, and this is the process in which we are going. So in the first process, we have completed assets which are linked to Reva and the grinding units, Chuk, Chunar and Sarla, and the balance are also under the process.
Okay, so that will happen later on, okay. And sir, in terms of, could you give us what sort of limestone availability is there at the plants and what optionality we have in terms of expansion opportunities, and what could be the first year of after you get them acquired, how much time you will be able to start production, and what sort of numbers you are looking at, please?
I would say that there is sufficient limestone availability, whatever we have been able to understand. And then second is that first time we have been also able to see the operation of the kilns, and they are operating as per the stated capacity. So we are quite hopeful and quite bullish that we will be able to produce the required quantity of clinker and cement. And as far as expansion is concerned, once we are able to stabilize operations, we'll surely share with you.
Sure, sir. Thank you. That's all from my side. Currently, we'll come back in queue. Thank you.
May I just request operator so that there's only one question asked per analyst so that everybody gets a chance to ask questions.
Sure. Ladies and gentlemen, we request you to please limit your questions to one per participant. The next question is from the line of Sumangal Nevatia from Kotak Securities. Please go ahead.
Thanks and good morning, everyone. Firstly, many congratulations to the management on progress on multiple fronts. Very strong quarter, the progress on GPA deal and also the divestment of the refractory business. Now, since I just have chance for one question, I have a question on capital allocation to Mr. Dalmia. So now if you see IEX stake value is almost 2,000 crores, where the last partial divestment happened almost 2 years back. And now also with this successful refractory divestment, the cash equivalent at DBRL is roughly around 3,000 crores and our stake would be around 12 to 1,300 crores. So the question is, I mean, given that we are now pursuing a sizable acquisition, can we now expect some divestment of these non-core assets to fund our acquisition? Because if you see, I mean, it kind of matches with the size of the acquisition which we are doing in the first phase. And if it can be funded through these divestments, it could be a very significant re-rating event for us from a capital allocation perspective. So any broad timeline and direction on this will be very helpful.
Sumangal, we have already, created, we were the first to announce and create a very formal capital allocation policy and framework, which was very detailed. And we are going to be very consistent with that. So I can tell you that we are going to, keep our net debt to EBITDA, below 2. And we will ensure that, our growth is funded with a very strong and well-capitalized balance sheet. Now, what are the decisions that we will take along the way will be evaluated time to time by the management and the board, and appropriate calls will be taken. I think, these companies are publicly listed companies, and I don't think I can give a very definitive and clear timeline in terms of which I will be able to, we are going to, decide this. But I can tell you that we are very strict in terms of monitoring our capital allocation policy and our capital allocation framework, and we will be well within that in this phase of growth.
Understood, sir. So our capital allocation policy was quite encouraging, but I mean, at least directionally, do we look to keep the gross debt also under control and use these in some time in future? I mean, just broad directional sense.
Sumangal, I think I've answered what I had to.
Okay, got it. No problem. If I can just squeeze in one more question. I mean, on the pricing environment.
Mr. Nevatia, may we request you to please rejoin the queue? We have participants waiting for their turn.
Sure. Thank you and all the best to the management. Yeah.
Thank you.
Participants are requested to please limit their questions to one per participant. The next question is from the line of Pinakin Parekh from JP Morgan. Please go ahead.
Yeah, thank you very much. So my question is on the capacity addition roadmap. Now the company has reiterated the target to reach a vision to reach 75 million tons by F27. And at this point of time, the ongoing projects takes it to 49 million tons by F24. If we add Jayaprakash, it goes to 54. There is still a very material gap of 21 million tons, and the timeline says 3 years. So when should we expect announced growth projects to get announced, or is this 21 million tons going to be predominated by M&A and acquisition?
In fact, we are doing our groundwork, and maybe in a year's time, you'll be able to know capacity-wise that how we'll be putting up new capacity. So we are confident that whatever study we have done that we should be able to reach 75, and at the right time we'll be able to share with all of you also our specific action plan.
I just want to add to what Mr. Singhi said. Our growth has always been a mix of organic and inorganic. I think, we are going to have an organic plan in place to go to 75 to the extent we think it is appropriate at this point in time. As you know, some of our organic expansions are in progress, and we are making a blueprint to further grow it. And the inorganic opportunities are something that we continuously evaluate. And I think JP is one such example. I think our focus right now is to complete this acquisition, ensure that, we bring it to the efficiency parameters and the market share that Dalmia hopes to gain in these markets. And only after that we will examine what makes sense in terms of more inorganic deals.
Sure, sir. Just to understand, is this F27 75 million ton a hard number, or is it more like a vision of increasing capacity? It may be a year or 2 or 3 years later. How should we look at that? Because it's a very material jump going from 54 to 75 in 3 years' time.
Yeah, Rajiv, go ahead.
Yeah. So, see, when we laid out a vision of 110 to 130, that was a vision. Because at that time we were 26 million capacity and we wanted to see, given the opportunity in the marketplace, we said we clearly see an opportunity to accelerate our expansion. Then we said first integrated milestone of 49 million ton by FY24, which we are absolutely on target to meet. And then we spoke about saying that, because we have come out with the capital allocation framework and we said we don't want to increase our net debt to EBITDA more than 2, we need to have secular growth. We need to grow at least at 15% CAGR year on year. And that's the reason we put a 75 million ton target. Now, it is not a hard target in the sense that, see, the economic condition is still volatile. So we will, as a prudent manager, will keep evaluating the opportunity that we have. But standing where we stand today, we believe the opportunity is huge. All the announcements getting done by the government, we see the private capital, we see the pent-up demand coming, election year coming. We believe that we are on the right track. But, as a prudent management, we keep looking at our strategies based on the risk parameters that we have been defined by the RMC. And we keep, changing our plans. But yes, our integrated milestone 75 million ton, it may go up here and there, but given where we stand today, we believe 75 million ton is doable and we'll do it.
Understood. Thank you. That's very clear.
Thank you. The next question is from the line of Indrajit from CLSA. Please go ahead.
Hi. Thank you for the opportunity and congratulations on a good set of numbers, particularly on costs. My question is on the power costs. You mentioned that your per kcal cost went down from 2.5 to 2.4 odd. But when I look at slide 14 of the presentation, power cost per ton has reduced from about 1,500 to 1,200. That's a good 25% reduction. So is there a change in mix or anything else that has gone into this cost, and how sustainable do you think this reduction is?
Dharmender?
The reduction in the power is also contributed by increasing green power proportion, which has increased to now 24%. Previous quarter it was around 16 to 17% or so. And that is sustainable.
In terms of fuel mix, has there been any meaningful change in terms of petcoke, coal, etc.?
The fuel mix continues to be non-petcoke for the power, which is coal, domestic coal, lignite, etc.
Sure. Thank you.
And in totality also, if you look at cement plant fuel mix, then yes, petcoke has also broadly around, say, 65 to 69%. But at the same time, other fuels which were comparatively economical, that has gone up, and on that account also the cost has come down.
All right. Thank you.
Thank you. The next question is from the line of Amit Murarka from Axis Capital. Please go ahead.
Yeah, hi, good afternoon. So just on power and fuel costs, so the slide mentions that you'll be going to 69 megawatts of WHRS, but for FY24, you have a wind and solar plan, but is there any WHRS plan as well?
There is one WHRS which is work in progress, so that will get commissioned in next year.
Yeah, so that will take it to 69 megawatts, right?
And thereafter we'll have WHRS in all kilns.
Okay, fine. So there is no scope after that to do more WHRS then?
After FY24, but then definitely whatever say new capacity would be added or the JB capacity would be added, that all will have.
And how much savings will come from this in FY24?
That definitely can be shared separately.
Okay, I'll come back in the queue. Thanks.
Thank you. The next question is from the line of Girish Chaudhary from Avendus Spark. Please go ahead.
Hi, thanks. Good to see this operational performance during the quarter. So on this acquired capacities from JP, if you can throw some more concrete details on the utilization of these plants, the current profitability structure, and importantly, how do you plan to ramp up and bring in synergies within the existing capacity assets of yours?
Once we are able to close the transaction and we are able to take possession and start operating, then definitely we'll be able to share our specific action plan that this is how operations would be optimized, this is how synergy will take place. We are quite hopeful that the quality of plant which we will be inheriting as well as the market which we will be in, it would be a very good acquisition.
Okay. Just as a follow-up, when do you expect this transaction to close?
This transaction is subject to certain specific conditions. So maybe in few months' time, the definitive document which we have signed, that should get over.
Okay. Thank you.
Thank you. The next question is from the line of Prateek Kumar from Jefferies. Please go ahead.
Hello. Yeah. Good afternoon, sir, and congrats for great results. My question is on East region pricing. So there's been like a pertinent improvement in pricing within Eastern region.
To Mr. Prateek Kumar, but there is a lot of disturbance from your background.
Hello.
Yes, please go
Yeah.
ahead.
Now it's clear.
Yeah. So sorry. So I was asking regarding there is this pertinent improvement in pricing in the Eastern market in past 3 to 5 months. They sort of continued into fourth quarter as well. So any specific reason attributable to this? I mean, while other regions are literally struggling on any price changes, so what has helped pricing in Eastern market here?
Now it looks like that the demand is improving and there are good prospects as well. Whatever few problems which were there in past in regard to ability of sand and others, so that is also not there. So in view of that, we have experienced better demand and better price also, and we hope that this would continue.
Okay. And any major capacities which we have commissioned, small capacity which we have commissioned during this quarter?
No, please.
Sure, sir. These are my questions. Thank you.
Thanks.
Thank you. The next question is from the line of Satyadeep Jain from Ambit Capital. Please go ahead.
Hi. Thank you for the opportunity. Just a question. Mr. Dalmia mentioned Project Lakshya to strengthen the management team. I believe earlier we were looking at succession planning and strengthening the second layer of management team as a potential succession team. How and then we had some exits, I believe last year. What is the thought behind now looking at that succession planning again? And if there is, what's the progress on that? That's the question. Thank you.
Let me take that. We have to build a management team looking at our decadal vision. So we are looking at like by FY31 to be 110 to 130 million tons and by FY27 to 75 million tons. We have to look at what capabilities and competencies we need internally to be able to achieve that vision in a sustainable manner. So I think we need to look at what are the enablers to build this scale. We have to look at what will make our business even more sustainable. And on the basis of that, we are starting to plan today. So as you know that a lot of new capacity is being added. We are also doing a very major acquisition in a new market. And I think there will be more such events in the next 5 to 8 years. So looking at that, we are planning how do we train our people to take more challenging roles? How do we assess them? How do we coach them? How do we support them? And on that basis, we are planning our internal, human capital transformation. So we are going to do, a lot of metrics which we will measure. And on this basis, a lot of opportunities will be given to youngsters in the group. So I think broadly that's what I can say. We want to build capabilities for a scalable and sustainable operation of this size, and we want to give a lot more opportunity to youngsters in the company. Rajiv, Mr. Singhi, you want to add to this?
No, I think this is what we are in the process, and we are quite hopeful that in time to come also we will have a very strengthened team which will be able to achieve the vision of 75 million ton and 130 million ton.
Yeah. So if I can just add to what Sunit and Mr. Singhi just said, so see, this is part of the overall, organizational development, and succession planning is a part of that. Succession planning is not only about one layer or two layers, but how do we create a set of leaders who can potentially take over a larger role at the drop of a hat. So, we have formed an executive council of 11 people. Each one of them can potentially take the highest role in the company. We have identified 41 young leaders across different banks and different functions who are the high potential leaders of the future. So, we are doing in a very structured manner, in a right manner, keeping as Prince said, the next 10 years vision that we have in mind. And I think succession planning will get rolled up into all of it.
Okay. Thank you so much.
Thank you. The next question is from the line of Anupama Bhutra from Arihant Capital. Please go ahead.
Good morning. Good noon, actually. So I have a question regarding carbon credits. Since we target to become carbon negative by 2040, so how does it work? Like, do we collect any certificates or do we sell any certificates? Like, any involvement there in the company with the carbon credit certificates?
Presently there is no international carbon market except a little bit voluntary carbon market. So on account of that, this international carbon market has not got activated. And as per this COP21 agreement, now international carbon market may get activated in a year or two. For that, right type of mechanism is being worked out. And at the same time, even in India also, now Indian government and Bureau of Energy Efficiency, they are exploring ways and means to create carbon market. And once it happens, then definitely whatever projects we would be doing to bring down carbon footprints, that will get and that will become eligible.
Okay. Thanks. That's it from my side.
Thanks.
Thank you. The next question is from the line of Shravan Shah from Dolat Capital. Please go ahead.
Sir, I need a couple of data points. Trade share for the third quarter, lead distance, premium share, fuel mix. So please, sir.
Amanda?
The trade percentage for the quarter was 60%. Lead distance was around 310 kilometers. And on the fuel mix, we used about 70% petcoke and 15 was coal. And what was the last part that you wanted to?
Sorry, 70% petcoke, 16% coal.
And then balance is a combination of lignite, muscle, some alternate fuels.
Okay. And broadly, what's the TSR thermal substitution rate for the third quarter?
So I will probably come back to you on that.
Okay. Just to again clarify in terms of the capex for this year, we have 3,000 to 3,200 crore. For the next year, FY24, previously we mentioned 3,500 to 4,000. So is it remains the same considering the current JP expansion? So out of this 3,230 crore EV, how much are we planning to do through the date?
No, so let me see the next year's numbers will give you during the April earnings call. I think right now it is difficult because, as CVG also said, the consummation of the transaction is subject to certain conditions and approvals, which we don't know when it will happen, though we hope it to be happen in the next few months. So next year's capex budget will give you a better picture, a much clearer picture in April.
Okay. Lastly, in terms of the pricing, also. Okay. No issue.
Participants who wishes to ask a question may press star and 1. The next question is from the line of Navin Sahdev from Nuvama Institutional Equities. Please go ahead. Ladies and gentlemen, the line for the participant got disconnected. We'll move to the next question, which is from the line of Komal Ladha from Yellow Jersey Investment Advisors. Please go ahead.
Hello. I wanted to know if there's any plan of any price hike in quarter 4.
We couldn't hear that.
I'm sorry to interrupt, Ms. Ladha. We cannot hear you clearly. Can you speak a bit louder?
If there's any chance of price hike in quarter 4.
Sorry, we are not able to get you, please.
Any price hike, plan for price hike in quarter 4?
It all depends on how the demand is and how supplies are. And of course, because of high cost, there is effort by us also and maybe as per the market also. But definitely at the end of the quarter only we could share with you that yes, this is what the price has been.
Okay, and capacity utilization for the quarter?
This is 68%, Aditi?
68. Okay, thank you.
Thank you. The next question is from the line of Ritesh Shah from Investec. Please go ahead.
Yeah, hi sir. Thanks for the opportunity. So a few parts pertaining to the JP assets. One is, are there any tax gains that one can actually look at on back of the assets that we have bought? Second is, are there any liabilities, if any, and will the company be ring-fenced? And third is basically, what is the status on the balance assets? Thank you.
On the tax side, since it is a slump sale, so whatever cost we incur, so that will be added to the assets in depreciation. So we are not carrying forward any losses on them because it is a slump sale transaction. And on the liability side, whatever is crystallized liabilities, that will take over and adjust in the consideration, and balance they'll retain. So we are not taking over any liabilities.
Right.
On this transaction, as Singhi and Puneet also told, the remaining transactions documentation is in advanced stage of finalization and will get done soon.
Sure. This is helpful. Thank you so much.
Thank you. The next question is from the line of Nishant Pagrecha from InCred Equities. Please go ahead.
Thank you for the opportunity and congratulations on a good set of numbers, sir. So I have a question, sir. So recently you have won a limestone block in Nawalgarh, Rajasthan. So they're having a mineable reserves of around 160 million ton. So any update on the land acquiring there?
Can you repeat please?
So on this Nawalgarh limestone block,
yes.
Any update on the land acquiring there?
In fact, still we have to get the required letter of mines from the government, and thereafter we would start that activity.
So for the commercialization,
at the moment there is no land acquisition on this Nawalgarh mine. Thank you.
Okay, so it will take.
The next question is from the line of Saket Kapoor from Kapoor & Company. Please go ahead.
Namaskar, sir.
Namaskar.
Sir, one question on the general industry sentiment and capacity addition. So for the 9 months, industry as a whole, what have been the capacity addition in totality for the country, and how have the average utilization levels moved as per the increased capacity?
So it looks like, though exact number doesn't come up even from the government also, but it looks like that the capacity utilization for the year would be around say 64 to 66%. And this is also based on whatever say capacity additions which has happened or which would be happening.
But the size, sir, can you give some color what it was for last FY21-22 and how FY22-23 will be closing in terms of the absolute number of the greenfield expansion that has greenfield as brownfield both included?
So the current spending at around 40 million.
Didn't get the number, sir. Come again.
It's 40 million. That is the forecast for the current year that we gave in the earning release.
Okay. Sir, and on the line item freight charges, we have seen a significant increase.
Mr. Kapoor, may we request you to please rejoin the queue? We have participants waiting.
Yes, ma'am. I will join.
Thank you. The next question is from the line of Rajesh Ravi from HDFC Securities. Please go ahead. Mr. Rajesh Ravi, please go ahead with your question. Your line is unmuted. As there is no response, we'll move to the next question, which is from the line of Pratik Maheshwari from HSBC Securities. Please go ahead.
Hello. Thank you for the opportunity, sir. So just wanted to check on two things. One is the lead distance hasn't changed materially quarter to quarter, but there is an increase of 8% in the freight cost. Just wanted to understand what had led to that. Was it any change in the rail share or something? And the other thing, just wanted to get an update on the Bihar expansion also.
So on freight cost, the major cost increase has come on account of imposition of busy season surcharge imposed by the railways from October onwards. So that is one of the major account on which freight cost has gone up. In fact, various other initiatives which we have taken, so we have been able to contain our logistic cost to this extent.
And sir, can you share the rail share at the company level?
17%.
Okay.
Thank you. The next question is from the line of Navin Sahadeo from Nuvama Institutional Equities. Please go ahead.
Hello. Hello.
Yes, please.
Yeah, thank you. So thank you for the opportunity. Sir, just one quick question. Sorry, I got logged out. And sorry, this question is a repeat, but it was about JPA acquisitions. So I'm sure you would have done this due diligence of these assets and hence arrived at this acquisition number of 3,230. My question is does it require any more capex on two counts? One is, of course, to scale, since I believe these these assets are slightly old. So does it require, first of all, to get them at par to optimal utilization is one. And second, of course, is a capex requirement to bring the overall efficiency at par to the company benchmark. Thank you.
As I said earlier, in regard to how to bring up operational efficiencies to our company or group standards, we will share once we are able to take our start operations. At the same time, in regard to starting operations or startup expenses, there will not be much significant.
Understood. That's helpful. Thank you.
Thank you. The next question is from the line of Hitendra Gupta from Systematics. Please go ahead.
Good afternoon, sir. Congratulations, good set of numbers.
Mr. Gupta, I'm sorry to interrupt, but there is a lot of disturbance from your background, sir.
Yeah, just hold on. So my question is regarding freight cost. Though I understand there was a busy surcharge by railways, but the cost has increased from 600 to 700 crores. Do you think it will be continuing going forward in the future also?
Yes, freight cost would be around number.
Okay, and the busy going forward, the rail share would remain at 17%, sir? Or it will increase?
Maybe I'm just guessing that it may be 18-19% only, not much, because the rail percentage more is higher in case of east operations.
East operations. Okay, and how much percentage of east operations we have right now in terms of dispatches over in that region?
Yeah, region-wise, the question is not provide.
Okay, thank you. Thank you.
Thank you. The next question is from the line of Surya Narayan from Sunidhi Securities. Please go ahead.
Am I audible, sir?
Yes, please.
Yeah, thank you for the opportunity.
So most of the questions have been answered, but only one thing. Recently, the Newcastle coal prices have dropped significantly. So
Sorry? Repeat again.
Yeah, recently the Newcastle coal prices have dropped significantly, around 42% last week. So overall 48% from the top. So are we? So my question is that to what extent this coal will be dropping further, so that the equilibrium with the petcoke will be available?
Whenever we decide about procurement of fuel, we do analyze the cost, whether it's imported coal from any country as well as Indian coal, and based on that, we take decision for each plant. So at the moment, except in one plant, everywhere we do find that our pet coke is most economical, and wherever there are short distance coal which is available in India, we do procure that part. So at the moment, imported coal hardly economical.
That's correct. But about the petcoke, recently Reliance has opted out to sell the petcoke to the local market. So cement companies have to forcibly import. So what is our case? Are we sourcing petcoke from local sources, or we will resort to import altogether?
If we do not buy petcoke from Reliance because of logistic distance, and that's why we do import petcoke, and at the same time 3-4% we do buy from refineries.
So after this Reliance announcement, any spike in the petcoke was seen?
Not to our knowledge. Thank you.
Okay, thanks.
Thank you. The next question is from the line of Prateek Kumar from Jefferies. Please go ahead.
Yeah, thanks for the follow-up opportunity. My question is on your net debt calculation. So, sir, basically you include the impact of investment in IEX, while we don't include the investments in Dalmia Bharat Sugar and Dalmia Refractory in our net debt calculation. So while all of these three should be non-strategic or like core investments only. So any specific reasons there?
Dalmia Bharat Sugar as well as Dalmia Bharat Refractories. So these being group companies, so there is no intent to sell immediately. That is why, and especially the DBRL is part of the associates. So that is not counted as current investment, while IEX is current investment. That is why it is counted for debt equity, net debt to EBITDA.
So even Dalmia Refractory is not considered in our...
because of our stake being more than 20%, so it's an associate. So associate is not counted in that.
Sure. Thanks. That is.
So Prateek, if I can add, see, sugar is a strategic investment, so with respect to the percentage stake that we have in sugar is a strategic investment. Because as Dalmia Group, we believe that, cement, sugar are core businesses that we have. IEX is more of a treasury investment, which was done many years back, and that is something we've discussed at length in terms of our, intent to dilute over a bit of time. And third is the refractories, and if you remember, we had said that as we come out of our non-core assets, the factories we had actually done restructuring to, consolidate all the assets so that we can get a better value, and that we've already done. So that is again, because the group company has more than 20% stake, it's an associate, and that is shown the way it is shown. But again, the intention is the same, that we want to come out of the non-core assets.
Thank you, sir.
Thank you. Ladies and gentlemen, we will be only taking one or two questions from the participants. The next question is from the line of Shravan Shah from Dolat Capital. Please go ahead.
Thank you for the thing. One data point, premium share, what was in the third quarter? Second, when we said our rail share is only a 17%, then the increase in BG season surcharge, how come that can increase overall logistic, that is the freight cost, by close to 8% or maybe 82 rupees per ton?
Yeah, so premium proportion in this quarter was 22%.
Sorry, 42?
22. Yeah, compared to 20% in the previous quarter. And with respect to the logistic cost, as Cindy explained, one major factor was busy season surcharge that explains about 65 rupees per ton impact. And balances on account of we were having incentive, railway incentive till last quarter and this quarter. So that is now base has slightly gone up.
Okay. And last, sir, in terms of the pricing since December till now, have we taken price hiking any of the reason? And the current pricing is it lower than the average of the third quarter?
There is no price increase in the month of January, please.
And current prices is at par with the average of the third quarter, or is it lower?
Broadly they are there.
Okay. Okay. Thank you, sir.
Thank you. Ladies and gentlemen, this was the last question for today. I would now like to hand the conference over to Mr. Punit Dalmia for closing comments.
Thank you very much for all your participation and questions. As I said, that we are at the cusp of inflection point at Dalmia, and we are very excited about the future of India and the future of Dalmia. So look forward to your continued engagement and guidance and critique. And thank you very much for your participation. Good day. Bye-bye.
Thanks, friends. Thanks, everyone.
Thank you. On behalf of Dalmia Bharat Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your line.